Hello, traders. Let's take a look at the featured stock from yesterday and then let's find a new one. My goal is to set you up with some great trades, and I hope that you'll return the favor by subscribing to my channel and by posting your comments. You don't want to miss these trades, so make sure to turn on your notifications. Let's get started. We are 2.5 hours into trading on Wednesday, March 3rd. Hello, traders. Let's take a look at some of the recent picks. Then let's take a look at the market. Let's get our bearings, find a pick. That's how we do this. Let's see what we start with at the top of the list here. Airbnb. I suggested this after earnings. Downward sloping trend line. Stock looked great. Really was looking to move higher and challenge the high. That hasn't happened, but we did sell an out of the money bullish put spread according to the instructions that I gave you below that technical support level. And you can see how that 50-day moving average is still pretty safe here. So that's why we are selling out of the money bullish put spreads. It's the best strategy to use right now. Market is in a gradually sloping uptrend. That condition can continue for quite a while. This is the strategy. Do not buy calls. You are going to be exposed to time premium decay. This is the strategy you want to use. If by chance the market breaks major support, you can buy the short leg of your put spread back in, let the long side run. I don't see that happening, but that's how I would approach those trades. So in all of these instances, we're not buying the stock. We are selling out of the money bullish put spreads with one exception. Airbnb, not performing the way that I had hoped it would. As long as it holds this support level right here, the short strike price was 180, so it is still above that price level, but looks like one that we might need to leg out of. With higher interest rates, any of these IPOs are going to have a hard time raising capital. Higher interest rates, that's going to make it more difficult, more expensive for them to do so. They are particularly weak right now. AMAT, tech stock holding up very well relative to the tech sector. When tech rebounds, AMAT will be the one to lead the charge. Bullish put spread sold below this horizontal breakout. Still looks good. APPS, you know I like it. Downward sloping trend line broken to the upside. Bullish flag formation. Selling it out of the money bullish put spread down here at the $70 price level. 50-day moving average coming into play there. Still looks great. CGC, that was a stock I highlighted yesterday, all the way down here to this 2750 level. That still looks great, hovering around that 50-day moving average. Pot stock, a lot of interest in that group. Awesome. Disney, downward sloping trend line, bullish flag formation, still holding that breakout, but we're not counting on this breakout. We're going all the way down here to that breakout. So when we saw this spike, that's when we suggested putting that trade on. The premiums were still there. Nice trade. See how well this is working? DKNG. There's your bullish flag formation, downward sloping trend line, broken to the upside. This was on Monday. I put that commentary out Sunday night. I did not expect a gigantic green candle like this. I was hoping for the stock to open pretty much where it closed the day before. That would have given us a chance to sell a bullish put spread down on that support right there, which the 50-day moving average also comes into play on. We weren't able to get that trade off, but the stock still looks great. Mosaic, one of the only stocks that I recommended buying long term, 4 months out or more, deep in the money calls that have a very high delta. I believe this stock moves higher for many months. You can see how well it's doing today in a down market. PayPal, volatile as always. Look at that drop off of the high. Here's where we sold our bullish put spread. We were able to get this trade off. You can see the stock is coming back. It's probably going to check that breakout again. 50-day moving average, horizontal support. I'm still okay with the trade. I think PayPal looks great. LUMN. Hey, guess what? This is our pick of the day. So we're going to come back and take a look at that after we get our market bearings. Upward sloping trend line on a 5-minute chart. You can see the S&P breaking down below it. Looks like we're going to at least come back and make a higher low. Why do you think we're going to make a higher low, Pete? Why aren't we going to just blow right through this low here? Price action's been pretty soft today. Couple of reasons. We've got these green candles and then a long red candle. Green candle, long red candle. A lot of chopping here. This bounce has taken a long time to unfold. Even if we come down and test the low of the day, that will have been 2 hours for that bounce to unfold. Typically, bearish markets, bearish trend days, you will see a sequence of red candles in a row. Boom, 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 boom. Market is never able to come up for air when you have a bearish trend day. That's not what we see here. We see that there are green candles mixed in. That means that there is a bid to the market. I think we pull back, we make a higher low, double bottom, and then we start to rally back. Maybe get back to the opening price today, but overall the price action is fairly weak today, even on a daily chart. This is not bullish price action. Typically when we've sold off like this, you sell off, wham, right back, just like a rubber band that gets stretched. Not now. Very soft, mushy type of price action. Check the bid, rally. Check the bid, little rally. Check the bid again. Now we've got a downward sloping trend line here. I don't like that. So I'm going to click on the high there, click on that bar. Now you can see downward sloping trend line. This is resistance. Market can't seem to get anything going right now. If we take a look at QQQ, you'll be able to see that it is weak relative to the S&P 500. In fact, we are leaning on the 50-day moving average for the S&P 500. The 50-day moving average on QQQ, guess what? We're already below it. You can see how we've been trading below it. You've got nice horizontal support here coming into play around 310 on the QQQ. If we fall below 310, we're going to test the 100-day moving average at 306 very, very quickly. Tech is weak relative to the S&P 500. We're seeing a rotation out of tech. We're seeing a rotation into cyclical stocks. All I have to do is to put up the Dow Jones, and you'll see the comparison. Hey, look at how well the Dow Jones is holding up. Really, really well. It's near its all-time high. In fact, when the QQQ was pulling back sharply, the Dow finally made a new all-time high. IWM, that is the Russell 2000, also holding in pretty well. So small caps and the Dow holding in well relative to tech stocks. So right now, I think you've got to avoid some of these tech issues and focus a little bit more on cyclical stocks. Overall, as long as that 50-day moving average on the SPY holds right here, comes into play right around 380, then we're still in decent shape. We also have that upward sloping trend line that comes into play right there. So we have major support at 380. Let's take a look at bonds. TLT, very important because the market is getting its lead off of bonds. I had mentioned to you that this was a very deep sell-off, likely a selling climax. Hopefully we get a double bottom higher low here, but I don't think so. We got this nice bounce. See that bullish hammer right there? Then we get a nice long green candle. I referenced this a couple of days ago. If this were a capitulation low, we certainly had the volume, you would see another long green candle right on top of that one or soon after. Maybe a doji, then a long green candle. That's not what we're seeing. Market drifting lower. Bonds are drifting lower, I should say. Let's take a look at that 5-minute chart because we had a lot of news that came out this morning. It should have been very bond friendly. Okay, there's something I'm watching, OCGN. Let's go take a quick look because this is one that I traded earlier, made good money, then I gave some of it back. I was looking at relative strength in here, put up the SPY. You can see market down, 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 down. Stock pulls back a little bit and then starts to claw its way higher when the market's still falling. I like that. So I took a position here, drew my upward sloping trend line, and I got stopped out here. So I am still up for the day on this stock. I like the D1 chart. Let's go to it very quickly. You can see this is a bullish hammer, or excuse me, a bullish flag. There's your downward sloping trend line right there that's been breached to the upside. I was expecting the stock to continue to move higher. The volume's been very brisk on it. Didn't happen. Important to have your stops out there and to honor them. So I was stopped out here. What did I do? I drew a downward sloping trend line here so that I would know when the stock breaks it to the upside. I'm still not convinced that this is going to be a bounce. I think it's going to be just a short-term bounce and that it continues to look for support. Probably will wind its way down and eventually have a horizontal support level that's established where it bounces off of it. I would not be buying this. In fact,
because it's below the opening price right here, I would say that you're better off, if you're a day trader, to look for maybe a short on a violation of this little uptrend that it continues to go lower and search for that support. I'm not ready to buy it just in case. I'm going to drop an alert line right here in case this is the real deal and it continues to go on a daily basis. I still like it. This is a really good move for the stock. You can see that breakout right there, good volume. So let's get back to our analysis. I was on TLT and I wanted to mention something very curious that I see happening right now. I can't explain it, but I'm aware of it. So you have the TLT dropping today. We had all sorts of bond friendly news today. We had a weaker than expected ADP report. How can that be friendly for bonds? Well, we've had a spike in interest rates. Bonds sell off, interest rates go higher on the notion that economic activity is going to improve. We had 117,000 new jobs in the private sector, according to ADP in February. That was lower than the 177,000 jobs that were expected. Huh. I would view that as very good for bonds because it means that the Fed is not going to be hiking rates anytime soon, even though they've pounded their fist on the table and they've told us that time and time again. The market is still pricing in an economic rebound. We also got PMIs that came out today. They were a little bit light. We also had ISM services come in lower than expected by, fair margin. It's still in expansion territory, but also a weak number. We had a big oil build this morning that we found out from the oil inventory. So we've got 4 data points that came in today that should have been friendly for bonds. Bonds rally, interest rates go down. The market's been worried about higher interest rates. It's not happening. There's still a lot of downward pressure on bonds. So I'm not sure how to interpret it. All I can imagine is that they are still pricing in a whopping economic recovery as the coronavirus subsides. President Biden said that he believes that every adult in the United States is going to have vaccine available to them by the end of May. So hopefully that's true. Hopefully the economy jumps. I think it's going to. I'm not bearish on the market as long as the technicals hold up and as long as that SPY 380 level holds. I'm fine. It can bounce around it all it wants to. I would need to see a couple of long red candles closing on their low and closing below this 50-day moving average. Only then would I start to take on a more bearish tone. Right now, I am neutral to slightly bullish. That means sell out of the money, bullish put spreads. If we get that breakdown, then I'm going to have to buy my short puts back in, let the long puts run, come down to the 100-day moving average. I'll be taking profits on those long puts along the way. But I've got 2 videos that I've recorded on how to leg out of bullish put spreads, one for day traders, one for swing traders. So look for those if you are selling out of the money bullish put spreads. Let's take a look at the pick of the day, LUMN. Beautiful, nice relative strength. We go to the daily chart. Hello, awesome breakout right here through horizontal resistance at 1280. As you can imagine, I like selling puts. I've already looked at it. You can sell the $12.50 puts. So what does that mean and how did that strategy work out? You can see 1240 is all the way down here. So visually you can see we're well inside of that horizontal breakout here. My suspicion is that the stock is going to hold $12.50. In fact, I would be willing to buy the stock at $12.50. If that is my mentality, then my strategy is to sell the March 19th $12.50 puts and to bring in a 25-cent credit. I have to put up 20% of the strike price. So 20% of $12.50 is $2.50. I am bringing in 25 cents by selling those puts. That is a 10% return that I will generate in a week and 2 days if the stock stays above $12.50, which I believe it will. I believe it will continue to move higher. 10% return in 2 weeks in 2 days. Well, let's assume the worst. Gosh, Pete, what if the stock doesn't move higher? What if it moves lower? Well, I'm going to draw an upward sloping trend line right here, and we'll connect this right here so that you can see it. Yes, I'd like to have that trend line preserved. It comes in at about $12.50. If the bottom falls out on some kind of bad news, I'm not going to own the stock at $12.50. I'm going to own it at $12.25. So I get to apply the credit that I receive to reduce my cost. I still like the stock at $12.25. At that point, I can evaluate, is the stock simply pulling back because the market fell apart and I still like the stock? If that's the case, then I could turn around and sell the April $12.50 calls against the position, reduce my risk, generate some income. If the stock rallies back up to $13, I will have kept the call premium and the put premium, and that will be my gain. It's a really, really effective strategy, especially if you like the stock, and especially if you've got market conditions like we have right now. We're just chopping all over the place. Well, who knows what it's going to do? I believe that upward sloping trend line stays intact. If it doesn't, we'll adjust our risk. These are the types of plays that I'm looking for. How did I find LUMN? Easy. I went into my scanner. I went into heavy buying. There you can see a ton of great stocks. LUMN is amongst them. I also ran a very quick search in my custom search engine. Option liquidity, better than -2. Heavy volume yesterday. Relative strength on a daily, 4-hour, 2-hour basis. I could have even put heavy volume today. That would narrow the list dramatically. You could see some of the stocks that are really, really good. VFC was interesting for a bullish put spread. Banks have been strong. That's Morgan Stanley. Melco, nice breakout to a new high. Might as well click that one for you so you can take a look at that. Earnings there. Nice horizontal breakout. Goodbye. Selling a bullish put spread anywhere around this $21 level on a stock like MLCO makes a whole lot of sense to me. Really nice volume. So these are some great looking stocks. Boeing also looking very, very strong today. Super easy to find these stocks. Option Stalker has all the searches. We'll see you tomorrow.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.